are in listen-only mode.
Good evening, everyone. Welcome to Admiral Markets webinar of 29th of January 2014. Today, this is the start of a new series of trading. So this is the first part of price action trading. And have in mind that now we will start basically with the most simple system and most simple strategies presented to you. Each of these webinars will have incorporated more advanced strategies. So for the next time, we will have advanced strategy, and on price action trading 3, we'll have even more advanced. So I will explain step to step what is price action, how to trade price action, and today we start with most simplest way of trading price action. Just before I start with webinar, of course, risk disclaimer. So the risk disclaimer explaining that if you proceed further with me, you are accepting all the risks associated to Forex market, and additional risk disclaimer, and that Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not a co-UK website but a globally used com website. Forex is a risky business, and this is a personal opinion, so this webinar is for information and educational purposes only. With that said, we can continue. Also, I need to apologize maybe for this. As you can see, today I had an analysis on Aussie, and if you see this analysis on my proprietary method, Camarilla MACD, which is a combination of price action and indicator, we can see that after this it was 87.75.8, it went down, it touched 87.34, and then it jumped up again. So basically the first target has been hit. I don't know, I thought I only updated the Serbo-Croatian blog on our native mother tongue, so I thought that I had also updated com, but I see that I didn't have updated. So sorry for that. Because the price already hit this level after my analysis, I didn't want to do that after the fact. As you know, I always put my analysis pre-fact. So this was only published for Spiders then and for Admiral Markets localized, but on the main Admiral Markets blog, unfortunately, this didn't appear. So it seems that I forgot to put this on Admiral Markets blog. But surely tomorrow, and you know, each day I put my analysis, I will do that, and I will try not to happen again. As I know that you prefer this kind of analysis, so sorry if I missed it to post it on admiralmarkets.com today. Let's continue with our presentation. So we will talk about price action. What is price action? What do we use in price action trading? So the acronym for price action is PA, that means price action. Basic chart patterns, basic candlestick patterns, and pattern system presented. Another add-on, as I already said, is that in this series of webinars, we will go for most simplistic to more complicated strategies. So today we will start with most simplistic, and for each series, we will have a more complicated system. So the price action is technical and chart pattern analysis which attempts to find order in the sometimes seemingly random movement of price. Swing, high and low, tests of support resistance and consolidation are some examples of price action. So in price action, we don't use indicators. For trading price action, we usually rely on price itself, support, resistance levels, patterns, and candlestick patterns. It's usually allowed only one indicator to give us a direction or momentum cue when we trade price action. Traders usually use MACD or stochastic, but many traders also trade naked. They don't use any of indicators. So for price action, we can say it's basically selling close to resistance, buying close to support, trading breakouts out of triangles, wedges, and possibly using only one indicator, or trading naked. So that is price action. It doesn't use any algorithms which are incorporated in those indicators. The candlestick and price bar are important tools for analyzing price action because they help traders visualize the price movement. Candlestick patterns such as the harami and golfing pattern, cross, pin bars, or shooting star are all examples of visually interpreted price action. So price action usually trades close to support we want to buy or we want to sell into resistance, and we often use those Fibonacci numbers for determining our entry points. Price action is everything that a price does. It's just like every other facet of analysis, it's purely subjective. There are many analysts, many traders, and not each of us, I can say, uses the same methods for calculating and determining entry and exit points. Some of us use price action with an indicator. Some of us use another methods. My proprietary method and favorite method is Camarilla MACD. As you already know, I use double confluences, important patterns, divergence, momentum. But this is really, it's not so simple to understand. That's why I usually work with people who are interested in learning Camarilla MACD. For you, I always advise to start with this. So that is why I'm going to show you the most simplistic and more complicated methods. So today, most simplistic price action. Price action really works. Price action is indeed a method which can save you the money even if you lose the money. That doesn't mean that you will wipe your account. It will save you in the long run. So you will have the chances for recuperating and rallying and possibly reversing from losing to profitable trader. Price action usually uses naked charts, very few indicators or no indicators at all. It's an old school way of trading which has its roots before modern indicators have been implemented. A long way before those indicators were implemented, traders used those candlesticks with support and resistance levels and those chart patterns which are also implied by price action. An increase in price action is another way of saying volatility has increased. Algorithmic trading is not applied to price action trading. So algorithmic trading, which is usually indicator trading because indicators use algorithms, they're not applied to price action trading. Price action trading uses candlesticks and patterns a lot. So price action, when you see, let's say that price is moving to the upside, usually traders will wait for a pullback, draw Fibonacci levels, and then wait for those candlestick patterns to appear for a swing opportunity. So price action uses candlesticks and patterns a lot. Not many indicators. I said only one indicator usually, or no indicator at all. Personally, I know many traders from Forex Factory who don't use any indicator. They're just trading naked. That is called naked trading. In price action we trade trend line breakouts. As you know, trend line breakouts, or let's say chart pattern breakouts, breakouts, trend line breakouts, support resistance levels, selling into support, into resistance, or buying into support, which is in other words, it's counter trend trading. Then we use, as I said, breakouts and chart patterns. So those are things which we trade. Usually, trend line breakouts, support resistance levels, Fibonacci and support resistance confluence, breakouts and chart patterns. Okay? What are chart patterns? Chart patterns are reflections of price action in a given time. It's a pattern which is formed within a chart when prices are graphed. It's used in technical analysis, and they are either a reversal or a continuation signal. They can be used to project price action and to react. So I will show you those chart patterns for your reference. We need to do that constantly, so you would learn about chart patterns in this price action analysis. And then I will move to candlestick patterns, but only candlestick patterns which are presented in strategy. As you already know, we had basic patterns and advanced pattern candlesticks webinars with other markets, and because of that it takes a long time. It takes a whole hour to explain. Because of that, I will be only explaining candlestick patterns which are used in the current systems which I will present you. Okay? But those chart patterns, they are continuously appearing on the charts, and you need to learn them. You need to learn them because they are the core of complicated and most advanced price action systems or methods, whatever. So chart patterns are very complicated, not complicated in the sense that you cannot spot it, but they are complicated to learn if you are a beginner. So you need to start from scratch. That is why I will mention, just to get those patterns into your mind. Why do they appear? Chart patterns appear naturally. As you already know, we have talked about harmonic trading, and that butterfly patterns, those bat patterns which we see, they're also price action, but in completely other dimension. So the dimension of price action and harmonic pattern trading is different. It's the same thing. The same thing is they all use the price, but they are not in the same dimension. Price action is one dimension, harmonic trading is a different dimension. But they have in common that all of these patterns, whether they be price action or harmonic, they appear naturally. When price makes something, we can see and we can follow the price by placing trend lines close to support and close to resistance. With that said, we know how to do that, and we know what are chart patterns. I will explain them. Triangles and flags appear during indecision, accumulation, or distribution, excluding flat top and bottom ascending and descending triangles. So this is a triangle. You probably know that. And when you see price in between those trend lines which mark the lower and the upper border of the triangle, you know that we have accumulation phase. Accumulation phase is the phase when market usually waits for the price to explode in a given direction. Why I said excluding flat top and flat bottom ascending and descending triangles? Flat top ascending triangle is this. Flat bottom descending triangle is this. Usually this doesn't mean indecision. Usually the price will break out to the downside when we have flat bottom descending, or to the upside when we have flat bottom ascending triangle. So that will usually happen. But on these triangles, we wait for a breakout in a direction. Let's say that if we see the triangle close to support, and if it breaks to the upside, then we presume that the move will continue. If it breaks to the downside, we presume that the move will retest that support, now resistance levels, and move to the downside. So we usually wait for a retest to happen prior to enter a trade. Of course, I showed you how you can trade with trigger happy trades, but usually when you trade trigger happy trade, you need to protect your entries. You do that by placing trailing stop or moving your stop loss to break even after a certain amount of pips. It depends from strategy to strategy. Also, we need to say just a little bit about accumulation distribution phase. You already know what accumulation is. Distribution is when price begins to move. Then we usually have markup or markdown, and then again accumulation phase. Distribution phase is the phase where we have basically a trend or end of the trend. It's not so important now for you to know that, because this is the first webinar for price action. You just need to know about accumulation, because usually what you would see is triangle and then breakout of the triangle in a given direction. Chart patterns reflect traders' decisions. If we see a wedge, let's grill this. I will show you that, but let's see. If we see the wedge, rising wedge, you know that the price has gone too far to the upside, and we will usually see a downside price action. Now, I need to use this opportunity. As you already know, yesterday I have given you a trade direction for this was published on Admiral Markets website, but same here, Forex Factory and Admiral Markets website, same information. You see, dollar yen. What did I tell you, guys? What did I tell you? You see this? This was a complete price action example. I was saying that this is shorting level, POC, shorting levels. And you see where the price has gone. It hit our target to the downside. You see, this was yesterday, and this was clearly stated in this kind of strategy. Also, you will usually notice chart patterns on my analysis. That is why I extensively use those chart patterns, okay? And they reflect traders' decisions. There was also an example. I cannot. How do I find eye levels? This is my proprietary method of Camarilla MACD trading. It is basically I cannot explain it now. I do that on private mentoring classes, but they are basically something that I have invented myself, and it's a confluence of important support resistance levels and Fibonacci pivot points. But they are used in confluence with Camarilla. Also, if you follow, you would remember that I have also given. I cannot remember when it was, but I thought that it was some when it was, maybe 1-2 weeks ago. We had a rising wedge. This is bearish pattern, and we could see that the price basically hit the top of the wedge and turned down, breaking to the downside. So you will, if you read my analysis on Forex Factory and Admiral Markets blog, I will usually now, guys, again, I need to refer for a risk disclaimer. You need to know that that is my opinion. That is the way how I see the market and how I will possibly trade. So if you agree with it, if you see that as my advice, okay, that is advice, but not follow it blindly. So I don't want to be. I know that many of you have gotten a lot number of pips by visiting webinars, by following my blog and session recaps, of course, each Monday. But sometimes, of course, you already know that some things there will be stop loss hit. For example, on Aussie trade, we had a stop loss. Today we had a winner trade. On GBP, we had a winner trade. But last session recap, we had great trades on Euro, on GBP, but Australian dollar was a loser. It went to our target basically after after the webinar, but you know, sometimes that will happen, and that's normal. You need to develop your mindset to accept losses, not to blame it on myself or yourself or whatever. You need to accept the losses. So basically, as I say, when price action reflect trader's decision, all of my analysis, which I show you, which use these patterns, in my analysis, blogs, session recaps, they reflect my decision. I don't know what other traders do and what will they do, but usually I usually govern. My trades are governed by myself only. So that is basically also with these patterns. When I spot a pattern, I will use the pattern when I want to trade. So we will go step by step. I will show you. So we go from the scratch, okay? So trader's decision, your, other traders, all of traders' decision are usually reflected through the price. And price itself prints those patterns on your chart, okay? So basic chart patterns include symmetric triangles, flat top triangles, flat bottom triangles, rectangles, flags patterns, head and shoulders, and inverted head and shoulders. So this is example of a standard triangle. You know how we trade breakout with triangles. We usually wait for consolidation to end. This was the end of consolidation. After a breakout, there was a retest, then continuation. So you either can wait for a breakout pullback continuation, or you can trade the first breakout of the triangle as a trigger happy trade. So triangles. Also an example of a breakout of a triangle. And you will notice, yeah, no one is 100% correct, guys. So no one is 100% correct. So if I am 100% correct, that would mean that I cannot mistake. That is impossible, because everyone make mistakes. But we just need to be 70% right and 30% wrong in our analysis when we apply a good money management. So basically, if we do that, we will always be in a profit. There will be losing months, losing trades, but generally we will be in profit. If we do over leveraging, then you know, usually if you over leverage, if it goes in contra of your direction, if it goes against you, well, that will take time to recover. So that is, yeah. Oh, thank you, Igor. You're 90% correct. Made 200 pips from Monday recap. Ooh. Thank you very much, Igor. I didn't make it 200 pips. I made it, I don't know, maybe I need to, this is very, very, I like when you make pips. So thank you. I will memorize this. Thank you, Igor. I need to print this on the screen so all can see, guys. Our friend and trader Igor made 200 pips from Monday recap. Okay, that is great. I didn't have 200 pips. I think it was less. I don't know, maybe 70, 80. But you know, I traded other pairs also. But excellent, excellent. Well done, Igor. Well done, Igor. I'm very glad for you. Well, you know, sometimes it happens. That's why I am encouraging you. Come to session recaps. Bring your friends. Bring your friends who even don't know what basically trading is. Maybe only one who made some pips or see what the chart is. Because we all learn when we do those kind of things. I always explain why I would take entry there, why would I place stop loss there, why would I do this or that. So basically, just come and okay, enjoy. Everything is served for you freely. Okay, so if you want to take a look at those examples, you probably see that from this point when this trend line has been broken, euro on this example went to the downside. So basically, after the first swing, this was the start of down move or downside trend. So when we see a triangle, we usually determine that the price will break out in the direction of the main trend. So if this is a main, remember this is intraday time frame, and we usually do intraday trading. So when you see this kind of price action, you want to trade breakout, preferably breakout in the trend direction. So when you see a consolidation, because triangle is a consolidation, you want to exploit a breakout in the trend direction. So in this example, we can see that this trend line has been broken, downtrend has started. This is a consolidation. We want to see breakout to the downside. At this point, the candle has broken to the downside, retested this lower trend line of the triangle, and then proceeded downward. So basically, triangles do that for us. They are giving a price consolidation, and the trade is better if it breaks out in the trend direction. Now, this could have been also that the price maybe could have broken out in this direction, but then you need to see how many pips is to next resistance. If next resistance is very, very close, then we would probably not trade a breakout in that direction. We would stick for a breakout in trend direction. So this is all. These are all examples are from triangles. You see this triangle also downtrend and then breakout in the trend direction, which is very good and very, very fruitful. Then let's see another example. Aussie 15-minute time frame. You can see basically this was the break, but this was not a triangle. So in this is a flat top ascending triangle. We would like preferably to see a breakout in this direction because this is ascending. You can see this is ascending, but 15-minute time frame, usually on lower time frames you can trade in both directions, but starting from 1 hour to 4 hour, then you usually will want to trade in trend direction. Just a question, can you tell us about support and resistance levels? Yes, I will. What was your name again? Carlis, Tim. I will tell you about support and resistance levels on next webinar. It will be price action trading 2. For this webinar, we are talking about chart patterns and candlestick patterns, because I will present you a basic system which uses candlesticks and just one indicator. But these chart patterns we need to memorize it each webinar. So on next webinar we will talk just a reminder of this chart patterns, and then I will explain you about support resistance levels and show you a system which effectively uses support resistance levels. But because we will talk about candlesticks today, and this system which I will present to use candlesticks. But if you want to ask about these levels, those are my levels, proprietary levels, which I did along with my friend, because I really cannot do it myself on 27 pairs. So basically we split. I did one part, he did the second part. So basically those are all manually drawn levels which represent important support and resistance levels during time. So I call it historical levels of support and resistance. So again, when we see a ascending triangle with flat top, we usually want to trade it into that ascending trend line, so to the upside. But as we can see, this example also a breakout and retest, because that retest is also important. So breakout, retest at this point, and continuation there suggested that the price will continue going to the downside. So basically, everything is tradable. You can trade to the upside, to the downside, but if you go with triangles, we prefer that to do that in trend direction. Okay. Another example, this is dollar yen 15-minute chart. You can see that in this example we saw a breakout to the downside. This was a breakout to the downside in again trend direction, and it perfectly depicts what descending flat bottom triangle does. Well, if you see this chart correctly, you can see that the price broken to the downside in this direction of descending trend line and continued to go down. So this is also of importance to you. If you see that trend has changed, so from this trend line, this is a trend change. This is a confirmation of trend change. This is a bit of retracement and consolidation. So if you see this downtrend and you see a descending flat bottom triangle, you can trade the breakout of this support, because that usually will tell you that the price will go to the downside. So we have a downtrend and we have a flat bottom descending triangle. So usually when you see that, and if you see the break to the downside, that will mean that the price indeed is continuing to the downside. Okay, continuing to the downside. Now this is example of breakout pullback continuation pattern on basically a trend line break and support. But you know what breakout pullback continuation is: breakout pullback retest of that trend line and continuation below this point. This is a rectangle. Also rectangle, you can see a consolidation. Basically rectangle has two, it's not important to be perfect double bottom and double top. So rectangle usually we have double bottom, as we can see here, and double top there, and usually at the break of the rectangle in the direction of the main trend, there will be a continuation to the downside. I'm not so fond of rectangles because rectangles have usually high range, so I'm not fond. Also, we can see in this example of rectangle, bearish flag, and a triangle. You can see that bearish flags are retracements in a trend. So flags represent retracement in a trend. What does RSI say? Says we won't talk today, Michael, about RSI. There will be times when we will mention RSI, but not today. RSI is basically a leading indicator of price action. It can be good, but we don't use it now in price action, this kind of price action trading. We will talk about RSI other time. Now concentrate on these patterns. So bearish flag, when you see this is downtrend, you know, swing lows, then higher, then lower highs, then lower lows, lower highs, and this is a bearish flag. And usually those bearish flags represent the retracement in bearish trend. So you can see the retracement there and a breakout of the flag. Retracement and breakout, retracement and breakout. So flags are basically retracement patterns. So in a downtrend, those flags will look like this. In uptrend, those flags will look, of course, different. So, but have in mind that perfect flags, and these are perfect flags, appear usually in downtrend, and we want to exploit them at the break of the flag, whether we want to trade breakout, pullback continuation, or trigger happy trade. Also, triangle, you can see again triangle broke in the direction of the trend. So those movements are good enough to make good number of pips if we trade it in the direction of the trend. Now pennants are similar to flags, but a bit different. You don't need to now distinct between two of those because they're usually more or less the same. Pennants, flags, you see now this is bullish example. You see a downtrend and a breakout in other direction. And bullish wedge, you know what wedge is. Wedge pattern, this is bullish wedge. So basically bullish wedge usually will look like this, or it will look like this. So falling wedge is a bullish wedge, and a rising wedge is a bearish wedge. Okay, so when you see those two kind of patterns, you know whether that is bullish or bearish. So basically when you see a wedge like this is a bullish wedge, and we expect the price to go in upside direction. Bearish wedge would be completely different. Let's see if I can see sort of a wedge there. This is bearish wedge. You can see you can connect those tops and those bottoms, and this is a bearish wedge. It's rising up, and we want to see a breakout. This is the point where breakout happened, and you see the price continued to go down. Please tell difference between pennant and triangle. You can see the difference here. Pennant is this. This is basically a pennant, and this is a triangle. So triangle will look something like this. Let's see, it's not a perfect example, but triangle is this, and pennant is this or this. Triangle has a vortex here, and pennant is basically a channel. So there is a difference between pennant and triangle. Pennant is like this, triangle is like this. Okay. Now it's very clear to you. So if you ask me, maybe you wanted to ask basically about the flag and pennant. Flag sometimes will usually, or let's say a pennant, will usually have a pole. So if you see a flag, this is a flag, and if you talk about pennant, there will usually be a pole to the downside. Now I didn't make this in this example, but we'll usually see a price action, direct price action, and something like this. So this is also qualified as a pennant. No, pennant, if you ask me that pennant and channel are the same, basically, if you see this, like this pennant, this is not the same. But if you see a pennant which is qualified as a flag, then that is the same, because we have a channel. But the important thing is that these bearish flags are supported only on a downtrend, as they represent the retracement. They represent the retracement on a chart. Okay? They represent a retracement on a chart. This is more advanced pattern, this kind of pennant, but we will not talk about it now. We go step by step from most simplistic to more complicated. For now, for the time being, just memorize this kind of stuff. Okay? We will talk about those advanced patterns in one of next webinars of price action. Again, you can see wedge in this example, wedge, rising wedge, bearish price action. Now, head and shoulders pattern, you know already about head and shoulders. You know that head and shoulders are bearish pattern. So you see a left shoulder, a head, and a right shoulder, and then usually there is a breakout of that neckline which connects shoulder and head, and after the break of the neckline we want to see a downward price action. So we have head and shoulders and inverted head and shoulders. So those are most simplistic and most, how can I say, the patterns which repeat most constantly. Okay, so try to memorize those, because they will be of a great help in your trading. They appear constantly on your charts, guys, and they usually signify important moves. Okay. Now in this example we see what was head and shoulders, and in next example we see inverted head and shoulders. So if you follow my analysis, you will usually see on the blog and on the Forex Factory those kind of patterns. Okay, so we have, this is bullish wedge, this is inverted head and shoulders, and you can see the price action. This was a perfect trade setup when the price was below 29. I remember this. So this was also taken from my chart. Okay, so memorize these chart patterns. Now, as we had a webinar about candlestick, I will only explain candlestick patterns which are used in different strategies. If the strategy use chart patterns, we will also cover them. So we will also cover them, but because we already had webinar about candlesticks, I will just remind you of the candlestick that are used in particular trading method. Okay. So in this example, you can see in this example, we will use 4 candlestick patterns. Those are namely bullish hammer, shooting star, piercing line, and bearish hanging man. Okay, and bearish hanging man. So what is a shooting star? This is a shooting star. This is a shooting star. You know about the pattern. The market is characterized by a prevailing uptrend. The first candle of the pattern is a white candlestick. On the second candle, a small body at the lower end of the trading range is observed. Color of the body is not important. There is an upper shadow, and it usually is at least twice as long as the body. There is almost no lower shadow. So this is a perfect example of shooting star. Next candle which you should pay attention to this kind of strategy is piercing line. Piercing line, there is two candle configuration in piercing line. The first candle is a black momentum candle, while the second candle opens up, goes slightly down, and closes more than halfway into the body of the first candle, but the second candle fails to close about the body of the first candle. So the most important thing is this second candle will go a little below the first candle, and it will close just a little above of the medium point of this candle. So basically, that is an important price pattern. It's called piercing line, and it usually happens. At close. We want to see it as close as support can be. So we want to see close to support. Okay. In this example, you can see how the price went basically to the upside after the piercing line. So this was piercing line, close to support, and price went above it. Hammer, this is hammer. You know about hammer. It's characterized downtrend, close to support. There is no upper wick, or there is a very short wick. We buy into it after the price has break its highs. Strong confirmation is on higher time frames. So this is a hammer. We want to see hammer close to support. Close to support, okay? Because it's a bullish pattern, so we want to see close to support. It's one candle configuration. You know about it. One candle configuration. Okay? Now, hanging man. Also one candle configuration. Hanging man. And what hanging man is, it appears in uptrend close to resistance level. Okay? We have a small real body at the upper end of the trading range. The color of the body is not important. And the lower the shadow of this candlestick is, it needs to be at least twice as long as the body. Similar to shooting star, but this week is to the downside, not to the upside. So shooting star is to the upside, and this is to the downside. Okay? And this is example of a hanging man close to resistance. Okay? Close to resistance. Now, let's see next slide. This is pattern system presentation. I can send you Zoop. Just write me on email. My email is, as you already know, tarantula@gmail.com. So I can send you Zoop indicator. Also Camarilla, I can send you indicator. But you already sent it. Okay, I didn't see email. I will take a look later. I have a lot of emails, so maybe I skipped it. Don't worry. I send it to you. So take a look at this pattern system presentation. Memorize those slides. Take a screenshot, and then we will talk about it. Okay? So, time frame is 4 hours. Stochastic is 4 in 3-3. Buy trade, sell trade. Stops are placed 10 pips above below last high. Always trade bearish pattern as close to resistance. Always trade bullish pattern as close to support. This is the general rule for pattern trading General rule. Trading as close to support and as close to resistance as we can. Okay? For the first time, you can use support resistance indicator just for placing profits. But the core of this system is candlestick patterns close to support and resistance level. Which time frame usually search for these candlesticks? In this pattern, 4 hour. When I do Camarilla trading, I do it on 1 hour, but for this kind of strategy, it's 4 hours. So you search for you only trade this system on 4 hour time frame. Now let's see how it goes. I have written and I have charted these levels manually, so you need to know about support and resistance levels, so you can use those indicators to mark your important levels. But as you can see, important levels are written, usually it will be previous tops, bottoms, and so on. When you see a pattern, dark cloud, but you also need to see stochastic above 80. So any of those patterns which are mentioned here qualify for a trade, but only 4 of these patterns: bullish hammer, shooting star, piercing line, bearish hangman. Only 4 of these patterns qualify for the trade. So, of course, we can always include dark cloud and bullish engulfing because they are very, very strong. So in this example, we see dark cloud. It's a reverse of a piercing line. So dark cloud close to resistance, and you can see a breakout. We have bearish engulfing candle, stochastics below 20, and it went up. Then we see hammer, again close to support, stochastic below 20, it go up. So basically this is the first pattern, this is the first system which uses this pattern. You can try on demo trade, of course, demo trade on 4 hour time frame. And the important thing is you need to memorize, you need to know of these candlestick configurations, because in the next webinar I will present you more complicated system which requires basic knowledge of support resistance, which I will mention next time, candlestick patterns, and some of chart patterns. Okay, so this is very simple system which uses 4 hour time frame, all those patterns we mentioned close to support and resistance. So, and of course stochastic for additional confirmation. So when you see a bullish pattern close to support and stochastic below 20, you go long. When you see, like in this example, important pattern like shooting star at the resistance and stochastics above 80, you go short. So it's just for it's very basic, it's very simple. But I also know that some traders are still using it for other forms of confirmation. So all of those patterns are traded. This is the general rule, and please remember it. All of those pattern systems are traded as close to support if we go long, and as close to resistance if we go short. So you can see it again. Engulfing pattern close to support, stochastic below 20, long trade. Shooting star close to resistance, above 80 we go short. Engulfing candle close to support, stochastic below 20, we go long. Shooting star possibly close to some form of resistance, and stochastic above, and you see it didn't do much pips, but remember this is 4 hour time frame, so all of those movements are big in pips. Okay, so that is the most simplistic pattern system. And now for next webinar, I think it's next month, it's pattern trading part 2. You need to know about those basic candlesticks and about those chart patterns, and then I will show you support resistance and go with a more complicated method, more advanced method of price action trading. But for those guys who are beginners, who want to know about basic price action trading, this is it. And this was, to be honest, I know a guy from Forex Factory which traded this system solely a couple of years ago, and as far as I know, I don't know what happened to him. It was good. I don't know how the system works now in these market conditions, but you can try to trade it, because this was a system I didn't invent it myself, but I know a trader who traded this system extensively. So the general rule is, and remember this, always trade bullish pattern as close to support, always trade bearish pattern as close to resistance, and you want to see stochastic below or above 80. Below 20 if we go to the long side, above 80 if we go to the downside. This is effectively counter trend trading, selling into resistance, buying into support. Okay, so this was all for today. I hope you have enjoyed this price action 1. So in the current month, next month, sorry, we will have, of course, we will have another, let's open it, admiralmarkets.com, and we see education webinars. We will have it next month. It's scheduled for next month, a more advanced version of price action trading. It will be named Price Action Trading to Pattern System Presentation. But for that to know, you need to know for this basic kind of strategy. You can try it, why not, on 4-hour time frame. Also, sign in for our webinars with Chris. I will also have weekly recap on 3rd of February, where I will post new possible setups and new analysis. And then we will have introduction to VSA part 2 and so on, Mare Math also, and so on. So if you have any questions, you can ask me, and we can move on to, of course, another how can I say, price action trading next month. Okay, take a screenshot, and you can try to trade it, especially if you are new trader, if you don't know about price action too much. But for next webinar, you need to already know about this, because I will use more advanced terms and more advanced trading methods. Okay, of course, more advanced from this. At the 3rd webinar will be most advanced of all of those. So if you don't have any further question, guys, yeah, my view on Aussie, Darshan, I will just I will be quick with this. My view on Aussie, I am really short on Aussie. I cannot go long on Aussie. I even shorted Aussie Yen today. I even shorted Aussie Swissy today. Today is FOMC, yes, pay attention. I cannot say anything because FOMC can spike the price counter to any opinion. So, but general rule, or general bias for me on Aussie is bearish, if you ask me about this. General rule is bearish. We hit the target today. Now I'm looking also to sell on pullback on Aussie. So basically, I'm still short on Aussie. Even to yesterday, when the price went above 88, I was short. Okay, but we will see what FOMC will bring today. Oh, this can be really nasty. I don't advise trading the FOMC really. There is a bullish flag on 4-hour, or maybe you have some comment, Goran. Yeah, we can see that bullish flag. Let me see. Well, you know, this webinar is not about setups now. Let's wait for tomorrow. I will be posting euro-dollar analysis, and also I will be explaining more in detail on my session recap. But for tomorrow, I will be doing euro-dollar. I cannot say it now, just because euro-dollar is it will have a big impact, this FOMC. I think that FOMC can really screw the price today. So, you know, it will be unwise for me now to comment. It's 1 hour till FOMC, so let's not do it now. I will do analysis after FOMC tomorrow, and we will see. We will see what will happen. Still, euro dollar is trapped in 36 and 37 range. So you saw it today. It dropped to 36, then it went 70 pips up. Well, that's too much for my taste, really. Also, dollar yen. Dollar yen should have dropped below 102, but it went to 102, then it jumped 40 pips. So that is basically what I think today. It was basically a stop clearing. So all of those weaker stops have been cleared prior to FOMC. So we will see. We will see. I will do the analysis on euro dollar tomorrow. Okay, no problem. Tomorrow I will do that. Euro dollar and maybe other pair. Okay. So after, it's not wise to trade it anything. That bullish line can also turn bearish on FOMC. We don't know how the traders will react to news. Well, okay, thank you, Goran, also. Thank you. So, okay, we will talk again. Watch FOMC carefully. And, of course, tomorrow on Spider's Den, on Unware Markets blog, there will be another of course, trading views. And sign up for new trading session. Thank you very much, guys. And talk to you very, very soon. Cheers.